Welcome back. It's time to talk commodities. Our editor Manisha Gupta is back and she's going to be telling us about rubber. Manisha.
Well, the weak economic China data has continued to weigh on many commodities, whether it's about metals or crude oil or even other industrial commodities like rubber, for example, is now trading at around 17-week lows. Well, we have seen weaker demand come in from China, but the weak economic data for the first half, the second quarter GDP numbers and the month of June, whether it has been about retail sales, factory activity and the record youth unemployment in China are some of the numbers that has weighed on further in case of rubber prices there. So if you look at the previous week, we've seen rubber prices decline by 3%, and for the month, we've seen prices now decline by nearly 17%. In the Indian markets as well, if last year an average rubber price closing was at 161 rupees per kg, for this year in 2023, the average for rubber RSS4 is at 149 rupees per kg. We have seen prices decline all the way to 143 as well. Now, when you look at the Indian markets, though, the numbers here stack up on the positive side. The production is up by 8%, 8.3% in the previous fiscal, and the consumption has gained up by 9% as well. But even with this, India has to import a huge amount of rubber because we fall short by nearly 30 to 45% in sense of our rubber demand. But with the numbers staying on the positive side, the hopes are that the Indian numbers or the Indian rubber prices could be supportive. The international markets, though, will continue to look at cues coming in from China.
Okay, got that. So that's all about rubber. Manisha, thank you very much for all of the details. And with that, we are out of time on this edition of Trade.